Howdy. I'm Brady Dale. I'm a reporter for Axios, and I'm here with Claire from Gemini. I'll let you introduce yourself.
Yeah, hi everyone. Claire Ching from Gemini. I run the global institutional business at Gemini. For those of you who are not aware what Gemini is, we're a crypto exchange and custodian that is regulated by the New York DFS. We're available in 70 different countries. And the organization has been around it was founded in 2014 by the Winklevoss twins. So yeah.
Cool. An exchange here. There's been some exchanges in the news this year, so that's an interesting topic. But we're here to talk about stablecoins. So Claire, just start us off. Stablecoins are these cryptocurrencies that try to have stable value. I remember back in the history of crypto when people thought that was an impossible thing to do in crypto, but now they're pretty accepted. What do people want stablecoins for?
Yeah, I think the value proposition for stablecoins is pretty straightforward, right? In the sense that I think everyone that's at this conference, what are we going after? We're going after instant, cheap payments that's available, right? And I think that's really, the primary driver that people are after. And the uses for it, right? If you think about it, it was really originally created so that people thought when crypto first sort of rose, it was really just Bitcoin. And so people originally tried to pay for things in Bitcoin, right? But then the volatility of the Bitcoin, I think as humans, we're generally just a little bit sort of discombobulated when we have so much volatility in a certain asset. And so you don't really want to see the price of your pizza increasing and decreasing, like a slice of that by 30, 50% intraday. So, stablecoins was really created as sort of like a tokenized version of a dollar that you can, put in $1 and get one, stable coin for that, and then also be able to convert it back for full value.
Well, right, but that's not really what people. That's sort of the long-term theory. But what are people using it for, on exchanges, right now? How do they?
Oh yeah, of course. So basically, if you're on a crypto exchange and you're buying Bitcoin or whatever token, you can convert that back into a stable coin instead of $1. You can do either, really. But when you hold on to the stable coin, what you can do is that you can instantly send it to somewhere else, let's say another venue where you can use that to buy an NFT or to interact with the decentralized finance world, or another crypto exchange, maybe, to take advantage of whatever price differences that you see there. And so there's this sort of fluid nature to it that's very useful, that's very helpful. Secondly, I think, sitting in my seat, along with retail users, we also have a lot of institutional users that are on the platform. And so that could be a hedge fund manager, potentially. And in their use, we're starting to see that clients are intaking their limited partners or LPs investments in their fund in a stable coin, receive that, aggregate it, and then send it out, convert it to dollars, and send it out to their bank at once, right? And then what do they get from that? They get the fact that they receive these stable coins in subscription, funds for really zero transaction fees, effectively, because Gemini and many crypto exchanges cover the transaction cost in terms of converting that and also sending it. And so they get that, and then they bulk, accrue it, and then they send it out as one wire back to whatever their fund's bank is, right? So instantly, there's a reason to use it all of a sudden, and it's been pretty fluid so far. So it's been very nice to see that. Yeah.
I would throw in one more use case for stablecoins. What I would say the biggest use case out there right now is you're a trader. So especially during times of volatility in the market, if you are on an exchange and you've got this thesis that some random little token is going to pop in value for a minute, you buy it out of your stablecoins, it pops up in value, then you sell it back again for more stablecoins, and you've got more stablecoins. You got more money. I would say that's the main thing people are really using it for in the world right now. It's just sort of getting back to a stable value on exchanges while they sort of play differences between tokens in the market.
Yeah, no, for sure. I think that in that case, right, it's the digital version of $1, if you will, right? It's for nothing else. Yeah.
Yeah, and it's great for arbitragers, right? If you want to if you see a difference between two exchanges, you can bounce between them really quickly without having to go through banks, which sort of take forever, and have all these different layers and stuff like that. So
yeah, absolutely. Brady, I didn't realize you were such an avid trader, just trading constantly here.
I talk to traders. I talk to them.
Yeah.
I remember back in 2017 when stablecoins first came out, and folks were like, what do you even want these for? Isn't the point, it's just aren't supposed to all be loose? It's just no, it's a way that you can get a little win and then get back to a stable value before you go for your next win, or loss. It can also be a loss.
Yeah, exactly. It goes both ways.
Yeah. I mean, when we were talking, I told you, I know traders who, for example, there's a stablecoin called DAI that people really like. It's kind of a decentralized stablecoin. And, it's on Ethereum. And I know people who just have permanent buy orders on different exchanges that are just like, if DAI drops below $1, they just buy $1,000 worth of it because they believe it'll always come back to $1 and they sell it again when it goes back. It's just like, and they see that as just like easy money. And usually that does work out. One day it might not, and then they'll lose that 1,000, but so far they've been doing okay. So yeah, the idea that you said about sort of using it for LPs and subscriptions of funds, like we're starting to see other uses out there. We're starting to see a more robust, real, full crypto economy where people are like sort of spending money and sort of buying services from each other. Any other examples you can give in there that you think is interesting?
Yeah, no, absolutely. I mean, I think that, more recently, if you've seen like sort of in the Ukraine crisis, there's definitely, the UN tapped like the Stellar blockchain to send USDC effectively, and then from that USDC that they, people received, they were able to, because of the integration that Stellar Network had with MoneyGram, they were able to get physical dollars or cash and whatever currency that they needed from the Telegram locations, which I think is pretty amazing in that sense. And I think those integrations are happening, more and more, right? I think because we're all, situated in the U.S. here, we don't really worry about the actual value of the dollar and the fluctuation of that. But if you're in an emerging economy in a developing world where the currency does fluctuate a lot, and it's been really plagued by, historically, like a lot of inflation, right, and hyperinflation in some of those like countries, and so. There are times where I think, we are seeing use cases now, right, in Latin America and Africa as well, where merchants actually will receive or ask to receive in stablecoin, like payments for goods and services in stablecoin, and then that basically increases, there like lies a natural demand for a payment processor then to say, okay, wait a minute, I'm receiving, stablecoin, and what do I do with this? And then they're able to set up integrations with different stablecoins or exchanges to kind of, be able to redeem their stablecoins, exchange it to dollars on the exchange, and then send that money back to, to sort of their as part of their treasury, right, into their bank accounts directly. So we're starting to see a little bit of that's happening as well. That's very interesting. But again, like in the U.S., right, you don't really quite sort of feel the emergence and how that's kind of creeping out in every corner in some ways. Yeah.
And I'm just going to do my reporterly duty and sort of explain one thing Claire mentioned there, which folks might not know about. She mentioned the Stellar network. And so Stellar is probably something that nobody here has heard of. I'd be surprised if any of you had. But it's a base layer blockchain network. There's a bunch of these out there that can do a variety of things. It's one of sort of not super big ones, but it's been around for a long time and continues going along. But much more likely you've heard about Ethereum, which is also allows you to do sort of stable coin-like things. But there's a bunch of blockchains out there that enable these sorts of functionalities. And Stellar, while it isn't super well known, has worked kind of especially hard to build these kinds of rails in different parts of the world and to be especially good at, Ethereum kind of tries to be good at everything. Stellar has tried to be especially good at payments, just, so some background there. So could you go into sort of the creation and destruction of stablecoins in as much detail as you feel comfortable doing? Sort of like, where do stablecoins come from? How are they made? And then how are they sort of like thrown away and turned back into regular dollars?
Yeah, absolutely. So, for example, like Gemini, we have our own stablecoin, GUSD, and again, like we're regulated by the New York Department of Financial Services. Obviously, that manages, and oversees like local, regional, commercial banks, trusts, a variety of different organizations, right? In that sense, like our regulators oversee sort of our management of like the stablecoin itself, and they need to see, attestations for how we're sort of operating, week to week on how we're managing the assets, how we're kind of, burning, creating them, redeeming them, and how we're managing the bank accounts. And so if you think about it, when, if Brady, you come to me and you say, hey, I like to get, here's some dollars. What you do is that you have an exchange, you have an account on the exchange, you send dollars there, I receive it in my bank account, most likely at JP Morgan, and then I say, okay, this is for GUSD, you want to convert it, then I move that dollar onto the separate bank account that is specifically for, obviously, GUSD sort of like pool, and then from there, we effectively, you can see that we have a smart contract on the Ethereum blockchain that is GUSD, like it's fully vetted in terms of security protocol and all things like that. It's never been hacked. And on there, you see that, from that dollar, we kind of move that dollar and give you an equivalent GUSD that's in your account effectively. And then, obviously when you come and instruct us, hey, I no longer want the GUSD, I want to burn it, we instantly sort of credit your account with the dollars. And what we do is that on the blockchain, we burn the GUSD, and then we obviously move from the pool, like actual dollars from the bank account into your bank account, obviously, like whatever, onto the account on the exchange onto the exchange bank account, and then go out to your bank account, obviously, when you instruct it. So it's a very carefully done process. And so on the back end, right, like what's happening is that we're managing not just a pool of like dollars, for example, we're managing, that could be like, similar to any bank really in some ways, right? You have dollars, you have short-term treasury, you have maybe like, you have money market. So it's a range of those things, and some of the other stable coins, depending on what they are, you get to see like underlying, like, what is the actual composition of that holding. So it could go as far out of the risk curve, if you will, into like commercial paper. It could be, things like that. And so obviously, like, the interesting thing, right, about stablecoin is that, because, and just crypto in general, is that it's available to trade 24/7. So the minute that you hear, like, kind of like the USDC blip that we saw, where the value of it crashed to 0.87, which is like the lowest it's ever had, like in its history of creation, is that there was a fear that there's a run, obviously, on the underlying, holdings at certain banks that was going down. And because you can access stablecoins in these markets instantly, over the weekend, you could actually really start to see a crash and sort of sell into that a lot more. But yeah.
So you mentioned USDC there, just a couple stable coins. So GUSD, Gemini USD, one that her company operates, and then USDC is USD coin. It's operated by Circle in a collaboration with Coinbase. I'm never quite clear on what that relationship is, but they started it together once upon a time. It's mostly Circle. And there's a few other stable coins out there. Paxos has one. The biggest stable coin in the world, the third largest cryptocurrency in the world, is called Tether. There's all kinds of questions that surround Tether, but it is very big and very important. And there's been some other ones that are sort of not so clear dollar for dollar. But let's stick with the sort of basic classic stable coin. It's just, you drop in dollars, you get something else out. Mm-hmm. They don't usually, especially for the big guns, they don't tend to stay like all just dollars, right? Like, what are some of the different kinds? Like, what do you guys put them in? Like, what do you?
Yeah, it's a mix of dollars, money market funds, and short-term treasury.
Okay.
Yeah, so like extremely liquid assets, right?
Yeah. And the reason why a company wants to run a big stable coin, right, is because there's a variety of reasons. I mean, obviously, they're very helpful to exchanges. Like, exchanges just couldn't function without them at this point. But beyond that, I mean, the profit kind of, if you get to be a big stable coin, you have a nice seniorage profit over time, right?
Yeah, I mean, look, I think that like it's sort of like running a stable coin probably looks kind of similar to running a bank in some ways, right? In the sense that like you have deposits, and then you can use those deposits to put them into like credit, or like short-term credit, long-term credit, whatever that could be.
Yeah.
That's really what it is, with the exception of the fact that, like, let's be very clear that you do not have clarity into what is the bank's like composition in terms of their assets, but you actually have quite a bit of that, and there's a lot more regulation, I think, very tightly, like by the New York Department of Financial Services over those assets, where they will say, hey, we need to be very specific on how we're managing that. Yeah. And so it's very transparent and very clear. And so, we have basically like monthly attestations, even on the QSIPs that are associated with the assets that we hold, that, are like, the accounting firms are vetting and auditing and making sure that, you hold the exact thing that we expect you to hold, effectively, right? So there's a lot of like regulating that's happening on the background of that.
Yeah,
for sure.
But just so folks can think about it in terms of, like, Tether, we've got like, I think, $82 billion worth of stablecoins right now. Mm-hmm. And, the only obligation the company has is they have to redeem any stablecoin any dollar someone has put in and gotten a stablecoin for it, they have to get a stablecoin back out, right? So there's never more in obligations than what people have put in. So if they're able to grow that, I mean, $83 billion, even at like 0.5% a year, that's a pretty nice line of like free money if you manage to get to be really large. I mean, obviously some of that has to go into operations and things like that. But in the USDC case, for example, one of the things we saw that was interesting is, so USDC, and correct me if I got anything wrong here, but during the various bank collapses, one of the banks held a piece of their reserves. Mm-hmm. And almost like, I mean, I don't know if it was quite this precise, but nearly to the dollar, sort of people knew what percentage of USDC's reserves were on that bank's balance sheet, and the amount the stablecoin dropped, like, very accurately reflected the amount, like if all of that went to zero, if none of that was restored again, like it was like, I don't know, 12% of their reserves, and like that's basically what the stablecoin went down, right? It went down.
Yeah, I mean, I think that there's something funny about I think crypto companies and just blockchain technology companies in general, where it's like there's this like drive towards like ultimate 100% transparency, and so Circle like candidly came out and said, hey, we hold 3.3 billion exactly at SVB. And obviously, we're working on redeeming, and then we're going to see what government actions are going to happen over the weekend. And that's kind of how people figured out very quickly, like, okay, that's what it is, right? Because usually you don't, like even for us, right, we're trying to manage our like concentration or exposure risk to different banks or different holders of these assets like fairly fluidly because things can happen quickly, right? And so therefore, you don't actually know what is the exact mix of that at any given time. Like it's possible that, there were obviously other banks that kind of went down that we actually had relationship with as well, but we were lucky that we, were able to pull out like a little earlier and weren't sort of, stuck in the situation. But you just don't have a good, accurate view of that. But I think, everyone is very open in crypto and saying, hey, this is the exact amount at risk. We will update you as it goes through. And it's generally like a 24/7 like working schedule, it feels like.
And is there, like you work with big institutions, like
Yes.
big investors, like real smart people with complex, risk profiles and stuff. Are there, and I feel like are there folks that you work with who actually, this seems like a funny thing to say because the whole point of stablecoins is to just be stable and boring, but like they aren't always. Are there big funds who kind of play stablecoins? Like would have some of them, for example, when USDC tanked, been like, I think they'll be fine, so I'm going to buy a pile of USDC cheap? I mean, is that the kind of thing folks do?
Yeah, no, absolutely. I mean, I think that there are lots of sort of arbitrage opportunities, right? Like this is definitely one of them. And so I think that, hedge funds in general are constantly looking for these opportunities to exist in the market where there are fractures and they're taking advantage of that. And the way they think about that is very simple, that like, hey, in the USDC case, like it went down to like 87 cents. And if you can generate like, a 13% return like over the course of, basically that gap was filled by like Monday open because of the announcements and stuff, right? Like there's this idea of like annualize that return. Like if you can always find 7% returns over the course of a day or two out of like, 200, 250, 300, depending on what assets you're trading, like days of trading, then yeah, that's a great return. I think that makes a lot of sense. Yeah, absolutely.
Okay. Yeah. Is that, I guess, a natural question, and I feel like, a thing that our regulators in DC are saying right now is like, that kind of trading just seems silly. We have dollars, and dollars don't, like our stablecoins, are they helpful? Are they a hindrance? Are they gumming up the works, though they feel to us like they're making things easier? Like, what's your take on that?
Yeah, I mean, I think that in this particular case, right, like you have to think about like the market structure of like what's happening there. So clearly, like you can go to USDC and Coinbase and say, I want to redeem and create with you one-to-one without any transaction fees, right? But when things start to get really scary over the weekend, or maybe like in this particular case, actually, I think Coinbase actually like paused their redemption ability. So you couldn't, like, it was sort of like you were in a queue to redeem, but you weren't able to get the money in your account all of a sudden so that you feel safe necessarily. But then what happens outside that is that they're trading markets, right? They're like markets where, it's not you're directly redeeming. So meaning like it's almost like a primary issuance of stock, right? Maybe you get the stock initially from, a certain issuer and it's at full face value. But as it trades in secondary market, meaning like you're no longer trading with the issuer, but you're trading with each other. It could be me and Brady trading, right? And I'm sitting here thinking like, like I want to be out of this thing. I don't care if I need to give, 10 cents away on the dollar. Like I'm okay with that because it could just go to zero. That's really the fear that you're playing with, right? So I think that type of like secondary trading or that market psychology is going to exist in like most things. I think the funny thing about the dollar, right, is that we live in I live in New York, we live in the US, and you just think, oh, it's a dollar. But what you don't see, right, is that, like, I come from the foreign exchange market, so I've sat on the sales and trading desk at Deutsche Bank, which is one of the global investment banks that has one of the biggest market shares in foreign exchange trading all day long. Like, you're trading, swapping dollars into euro, swapping euro into yen, like swapping yen into Turkish lira. You're doing that all day for different purposes. And in that world, you see that a dollar isn't a dollar, right? Because it's this two-sided thing. But we just don't have that relative grasp because you don't go out and think like, well, you're not using another currency. you're not seeing like a hot dog cost actually like 1.15 euros, but tomorrow it's 1.05, and that's not the lens you're seeing the world through. You just have a singular dimension lens. But yeah, that's the difference, I'd say.
The last year has given us a little bit more of that perspective. That, the dollar is not what it used to be. But you're right. Do you think stablecoins? So theoretically,
Yeah.
crypto folks would like to get rid of dollars entirely, right? Like they would like to have some way in which they could have a unit of value that just exists on the blockchains and isn't related to like the governments of the world. Do you think it's going to happen? Are stablecoins a phase, or will they get there? Or what's your take?
I mean, I think that, I guess like I'm not like a maximalist in the sense that like, yes, like I work in crypto now and like blockchain, but I've only lived in this life for the last 2 years of my life. I spent all of my training in the traditional financial services world. And I would say that like, this is it's a super interesting and curious experiment, right? Like we're genuinely touching something very, very new here. And so I don't have this view that this should just replace like the entire legacy system. But I think that these use cases that, we talked about at the beginning as well, are pretty interesting way to test, like, is it useful, to whom? Like, how does that matter? And I think that, I think in some of the previous sessions, like, there are other innovations that are out there that are like FedNow, RTP, like there are a lot of other, ways you could do certain things. And I think that they should all kind of exist, right? And figure out like pockets of where that sort of, where that adoption really takes place. I think it's genuinely just like a very interesting experiment, and we'll see how that kind of grows over time, depending on like how quickly you can, get that to people and who's touching it and why do they need to access it. Because, I think that there are lots of copycats now in crypto and blockchain in general, where it's just sort of like, oh yeah, it's this, but in blockchain. It's like, well, why does it need to exist in blockchain? Like, I'm not 100% sure. Like, there are things that are, like, when you look at, like, the equity trading world, right, like trading stocks, like, those markets have been there for such a long time, and it's a pretty efficient system. Like, if someone came and said to me, like, oh, like, let's tokenize, like, stock trading immediately, I'm like, yes, I get the settlement part of it, but the existing system in terms of that works, like, decently well. Like, I'm not sure the actual real additional like leapfrog benefit from certain things. So I would love to be convinced. So I guess like as much as I am in crypto, I'm kind of a skeptic crypto person.
That's
like
fair.
I'm like, you have to convince me why this is different and useful, frankly, right? That's what we're really here for, just to make things easier, hopefully.
Cool.
Yeah.
And that's a great place to end. Thanks a lot, everyone. Have a great one.
Thank you.